dumb deals. That's what Warren Buffett said about Kraft Foods buying Cadbury and the decision to sell its pizza brands. But Kraft CEO says the Cadbury deal was a great move for the company. In fact, Kraft now expects to squeeze an additional $1 billion in revenue from the transaction by 2013. That news yesterday sent Kraft shares to a 52-week high. We spoke to Irene Rosenfeld in a Bloomberg exclusive about the skeptics.
We are very excited. We were as excited today about the Cadbury acquisition as we were when we made the initial offer. It is transformational for the company. It sets us up on a very different growth trajectory, both in terms of the categories in which we participate, higher growth categories like snacks, the opportunity to have a broader geographic footprint, particularly in developing markets, and the opportunity to have more participation in faster growing immediate consumption trade channels.
You announced yesterday you do expect to be able to squeeze out an additional $1 billion in revenue by 2013.
Yes.
Where is this going to come from?
It'll come in three areas. It'll come from white spaces, the opportunity to put legacy Kraft products through the Cadbury distribution system in markets like India and Africa, Turkey, for example. The opportunity to put legacy Cadbury products through the Kraft distribution system in markets like Brazil, Russia, and China. So they're highly complementary companies. Our footprints are quite different, and the opportunity to be able to leverage the white space. We have a terrific opportunity to benefit from the sales and distribution strength of Cadbury in their markets, particularly in immediate consumption channels. That very nicely complements the distribution strength of Kraft in traditional grocery stores. And lastly, the opportunity just to take some of the ideas from one product to the other.
Just yesterday, Kraft shares hit a 52-week high. But if you take the perspective of what's happened this year, you've had a big battle up until this point. Kraft's biggest investor reduced his stake by more than 1%. Warren Buffett, Eaton Park, Tryon Fund, a number of very high-profile investors have stepped back from their positions. What is it that they don't understand about the strategy you're laying out?
I think a number of our investors have some skepticism about the synergy assumptions that will come as a result of combining the two companies. I believe one of the core competencies of Kraft has been our ability to generate synergies as we have combined companies. We bought the Lou Biscuit business in 2007, and we've generated considerable synergies there. We bought Nabisco way back in 2001, and we believe that we have a very good handle on where these $750 million of synergies will come from. We're making excellent progress. We announced yesterday that we are on track to deliver those synergies. We should generate about 15% this year, 70% by next year, and then 90% by the third year. And I think the challenge is just as we deliver the synergies, I think our investors will continue to feel good about the company.
The naysayers, of course, as you well know, and I'm sure you've read the press, say that you overpaid for Cadbury. Kraft's largest shareholder came out publicly in opposition to the deal. Here's what Warren Buffett said to Bloomberg in January.
She's a first-class human being. She's done a perfectly decent job running Kraft. I think this deal is a mistake. I think selling the pizza business was a terrible mistake.
What was it like to hear that in the middle of an already difficult situation?
We set out a strategy to transform the company in terms of the categories in which we participate, in terms of our geographic footprint, and Cadbury was a critical piece of that puzzle. As I had laid it out for all of our investors, we believe that this would set us up on a new growth trajectory. Warren has said on many occasions that when he's concerned about synergies, he's a little skeptical about the ability of companies to generate synergies, and when a company makes an acquisition, he buys two cards. One is a congratulatory card, the other is a sympathy card, and I feel quite comfortable that we will receive a congratulatory card in not too long a period of time.
He's got a tremendous platform. In May, to his shareholders, he said that the decision to sell the pizza business and buy Cadbury was dumb. That's a harsh word. Have you spoken with him since then?
I have contact with Warren, as I do with all of our investors. I understand that he liked our pizza business. We liked our pizza business very much. But as we looked at our long-term growth strategy and the opportunity to expand it beyond North America, we made the decision that it did not belong in our portfolio long-term.
How did that change your conversation with the board? Was there sort of a moment of truth, a breakthrough where you said, He's wrong. I know this is the right decision for the company because those kind of public comments had to be making your job as a CEO, your effectiveness and your decision-making ability come under fire.
I have enormous respect for Mr. Buffett, as I do for all of our investors. I understand that there is skepticism about our ability to realize value from the combination of Kraft and Cadbury, and I think time will tell as we deliver against the targets that we've laid out. I think we will make our case quite clearly.